Okay, moving on our program for today. Thanks once again to our audience for being so patient, and also to our sponsors for making this possible. Just to remind us that there will be an IFC Edge sponsored dinner at the Four Points by Sheraton Hotel this evening, starting from 5 p.m., where we'll be having a cocktail and just discussing how ESG and green features can be further incorporated into structures. Now, going into our next session on West Africa hotel investment and development in the post-COVID world, we have Wayne Goodwin, who is the Senior Vice President, Hotels and Hospitality at Sub-Saharan Africa, JLL. So good seeing you, Wayne. I guess I'll just hand this over to you and you can introduce your panelists.
Great. Thank you very much, Ayo. I hope you can all hear me okay. Great. Absolutely fantastic to be here with another session from API. And this time we are discussing West Africa and looking at hotels really in the context of the current environment, but looking ahead towards a recovery. And I think that's an exciting topic to be discussing. And I've got a great panel here today to help kind of paint some color to it and give some context. They're very active on the ground, particularly in West Africa. And I think we're going to have a good conversation here today. Right, so just by way of introduction, I've got Ewan Cameron from Westmont Hospitality Group, Ram Loken from Casada Capital Management, and of course, Owen Garnier from Radisson Hospitality Group. Welcome all.
Thank you.
Good.
Hi, Wayne.
Hi, good. I think we can hear everyone. Good.
Hi, everybody.
Good. Right, everyone. I think the intention was for me to run a quick presentation. I'm not sure if the API team have that available, but if they do, perhaps they can put it on the screen. Otherwise, we can get right into it. There we go. Good. So I'm just going to quickly set the scene just with a few slides, just to give a bit of context. I mean, I guess we're now, well and truly coming up to 2 years into the pandemic. We've adjusted our lives. We've learned to deal with this, and things really are starting to, I guess, become the new normal. But from a hotels and hospitality perspective, I think there's definitely the light on the horizon. We're starting to see some indications of a recovery, and that's really what we're going to be discussing today. So a lot of the previous sessions that we've had and discussions we've had with industry hasn't really focused too much on the numbers, because frankly we all know just how difficult trading has been and why that is the case. But I think now we can kind of start looking towards what the indications are of a recovery. So I think if you want to just flip through a few slides, I mean, I think the key themes, of course, really from an investment point of view, I think the extent to which demand has been decimated is well known. I think it's clearly manifested itself in a lot of job losses and impact for owners of hotels. Banks have come under pressure, but I think that what's at least positive is we've seen sort of less new supply coming into a lot of key markets. We've seen a lot of other positives that have happened from a macro point of view in Africa in particular. I think from an investment point of view, and of course this is an investment conference, so that will always be the focus of our discussion. Some of the key challenges have been around underwriting hotel performance. How do you forecast a recovery when it's a public health issue rather than a macroeconomic or hospitality issue that we're dealing with, right? So we've seen globally certainly not a shortage of capital per se. What we've seen is a difficulty in underwriting and getting the gap between the bid price and the ask price closed enough to have hotel trades globally. And I think what's pretty critical to that is having a line of sight to what the sort of future trading is going to be. And with high vaccination rates, we're starting to now have that guidance and price discovery that we can undertake. I think certainly from an operations point of view, there's been some positives. You can leave it on the slide here, but some positives around sort of redoing, going back to basics and rethinking a lot of how we operate hotels, how we as a sector, make things more efficient. So that these are sort of long-term disruptive factors that are going to play out and be helpful in the longer term. If you want just the next slide, I mean, I think this gives you an extent, and of course it's only 2020, which was the height of the crisis, just how much this impacted travel and tourism around the world. So you can see no other crises or event in modern history has impacted travel and tourism to the same extent. But I think what's also important to note, as much as the drop was there in 2020, just this proliferation of global travel that we've seen over the last decade, it has been a sector that has benefited a lot from emerging middle class and growing populations, particularly out of Asia, and the cost of air travel coming down. So, pros and cons. All right, that's in the next slide. All right, so I just want to kind of give you a bit of a picture on performance, right? So these 5 maps show you different months over the last 2 years and what the occupancy has been. So in that first map back in February 2020, pre-COVID, right, we saw a number of markets. We've put green there as the plus 60. Now, in the context of the last 2 years, anything over 60 is very good. That's probably not the color we would have denominated 60+% occupancy back then, but really to kind of give you that context of where the markets were. And then July, November, very little difference last year, and then coming out into May 2021, starting to see a little bit of change. And then if you look at October, the latest months coming out, a lot more markets returning to sort of starting to get to reasonable occupancies of kind of 50 plus, but still with a long way to go. Quite a few still in the 30% quartile and the 40% quartile as well. Right, so that just gives you a bit of perspective on how we're coming out, and I think the next slide will do the same. So what this really is if we look at the year-to-date period for September 2021 and we compare it to the same period in 2019, right? So pre-COVID, and what the little number is in each block is the index around what the percentage occupancy is as a percent of the 2019 period, right? So, and what I've done is put this relative to Europe, right? So you can start to get a sense of how Africa is shaping relative to let's say Europe. And I think overall, relatively positive picture. I mean, we can see Lagos, Accra, Sharm el-Sheikh, Addis still reasonably strong relative to where these markets were trading in 2019. And I think that's one thing we're really going to kind of focus on, the why and how that's happened and what does it mean kind of going forward, right? So the next slide. And I think while that previous slide showed the year-to-date period, I wanted to just show a 1 month period of September, right? Because that's really sort of the here and now of where we're at, following sort of a bit of a vaccine momentum, a bit of travel opening up in Europe. Not perfect. I mean, certainly a lot of red list impacts still on the continent and travel blockades, I guess, impacting these numbers. But you are starting to see a bit more positivity coming with each month that comes when we look at it relative to the same month in 2019. So once again, I mean, Lagos and Accra, and that's a good place to sort of start this discussion because it is the topic of today's conversation, have been relatively insulated from a hotel performance perspective. I mean, Lagos trading at a 93% index relative to where it was in September 2019. Next slide. And what this graph does is just show how it's tracking. the index for each month of how it was relative to the same month in 2019. So we can see that upward momentum, and this is the big question now. We often are talking about when is a market going to recover to 2019 levels. That's sort of the litmus, the base that we're working on. And what's important to note is 2019 was not a homogeneous story by any means, right? So different markets to get to 2019 levels need much higher performance. And I think that's certainly where a market like Lagos wasn't actually performing all that well. It's obviously a lower base to get back to. But I think there's that statement alone needs to be unpacked quite a bit more, and we're going to do that today. Just the next slide kind of shows you sort of a trend of, a lot of people are talking about kind of 2023, 2024 recovery rates. I think you're going to see different markets breaching their 2019 levels at different rates. So you will see some doing it last year. That is not to say that their 2019 levels were good or good enough and that there isn't further growth. But that's it all depends on a lot of factors that we're going to discuss here today. But certainly most of the markets not at those levels yet by the end of 2022. Next slide. And that just gives you a bit of a color around the sort of performance pictures. I mean, I think globally hotel transaction volumes are down. Don't need to kind of go through this too much. We know why. I think liquidity is there. It's really about the underwriting of performance and knowing what the trading outlook is going to be for a hotel for the next 6 months, year, 2 years. Very, very difficult in this time. So next slide. Coming to Africa, and these are just to give you a bit of perspective around transactions in Africa. We saw 2 relatively low volume years in 2019 and 2020, where we've now started to see a pickup led by private equity coming into the market, pricing being below 2019 levels generally, and a lot of investors still inquisitive around the region, and we're going to talk about that a lot today, but really looking at some good value prospects from a long-term point of view, that from the fundamentals that Africa hold. All right, next slide. Yep, and a big question mark around the African Continental Free Trade Agreement. Africa has this emerging population. By 2050, we're going to see 40% of the world's population living in Africa. There's a huge demographic dividend that is waiting to be captured. It is a young population. It will travel, and hotels are going to benefit from this. And I think that's an exciting thing for hotels and hospitality when we look and consider that only 1% of the world's hotels are in Africa. Next slide. Right, I think the debt side of things is also incredibly tough right now. Traditionally, DFIs have been very active in sub-Saharan Africa, looking at the development impact of hotels and hospitality, creating jobs, enabling economic employment. A lot of them are shifting focus to working capital provisions and supporting existing clients. And really the picture around getting new debt, particularly for development projects, is very difficult right now. Next slide. And I think this kind of paints a picture on investment volumes into different real estate. And although it's back to 2019, we can see that hotels have enjoyed a high proportion of liquidity relative to the broader real estate sector. And there's a few good reasons. One, the activity from and support from DFIs. 2, a lot of dollar or hard currency denominated currency impact. And that's kind of really underpinned a lot of the investment thesis for regional and domestic capital into hotels as an asset class, often diversifying a broader business interest into real estate through hotels. And that's really given the rise to a lot of international hotel operators coming into the market. Next slide. And I think this is a big thematic trend we're seeing globally and absolutely is playing out in Africa. There's blurred lines between real estate. We're seeing live, work, play being a factor, no longer as a hotel, just a hotel. It's also integrating co-working. It's looking at extended stay properties. It's all sorts of hybridization of hotels, and I think that's quite an exciting trend in an emerging market like ourselves, which has such a young urban population that's fueling the growth. Next slide. And I think we cannot ignore what has become an absolutely critical pillar of any investment globally is ESG. Critical path. I mean, we've seen the built environment contributing 40% of all carbon emissions. Hotels as an asset class are absolutely the worst user of energy per square meter of any real estate. So a lot needs to be done from a hotel and hospitality perspective. It's no longer just about how we treat our towels in the linen department. It's really gone full circle, and I think a lot of big institutional capital embracing this, and a lot of green funding and initiatives, which I know my colleagues here today have some good views on, and I'm looking forward to discussing that with them. Last slide. Good. Well, that's it. I think really wanted to just fly through that and give you a bit of a picture and really kind of get into the discussion with my colleagues. I think if we can bring them back, there we go. Good, gentlemen. I think 2 years has been a long time. We've seen a lot of things, and we've made a lot of COVID and the impact. But maybe Ram, if we start with you, what else has been happening? What are the other factors that we've been seeing that have impacted the sector outside of just COVID?
Wow, I think I'm not sure what else has happened besides COVID in the last 18 months. It feels like such a blur.
Yeah.
But no, it's important that you mentioned that, because COVID has been it has been a challenge for everyone globally, everyone in the industry. But I think it has also brought an opportunity for the hospitality sector in particular, for real estate more broadly, but for the hospitality sector in particular. We are seeing, and I think in this case, Africa can be, and West Africa can be a big beneficial there. You see an acceleration of trends. I think the movement towards work from home, the movement towards using the bigger use of technology, even shifting towards a stronger shift towards ESG. Those are trends that were there before, but they've completely accelerated because of COVID, for better or for worse. I don't want to pass judgment on what works or what doesn't, but it will in some ways, I think, in the long term, help the hospitality sector and cities like Lagos, Abuja, Accra, which are highly congested. It sort of urbanizes nodes and spreads a little bit the wealth, spreads a little bit the infrastructure, kind of reduces congestion in certain areas. There's not a clear, we can't say clearly that there are winners or losers in this, but hopefully there will be a big benefit to cities where the infrastructure was already crumbling and in a very difficult position. You will be able to sort of spread that a little bit. It's very unequal. I'm very aware of that impact, but I think one of the things that we really look forward to and we analyze now in our investment processes. Last year, when we did our investment committees, it was very much like, well, like you said in your slides, when is the recovery? Now it's become, well, where is the recovery? In which market? In which subnode? In which segment? And what are business travelers, leisure travelers? What are they looking for? I think it's all becoming very micro in our analysis. That we're not necessarily doing that before, because you just looked at the central nodes and you said, well, all the offices are there, so we have to be in this place. Now you look at it more saying, well, where is the residential area, and does it make sense where the offices are, that people are going to travel there or not? So I think that we have become a lot more detailed in our market analysis to look at those trends. And it's not only because of COVID, it's just because of the way people have adapted to it and changed their behavior.
Great, fantastic. Ewan, I think from a West Africa point of view, performance has been on a relative basis, I guess, a bit better. I mean, what do you think are some of the sort of factors for that? Is it the sort of domestic versus regional travel? What do you think is sort of underpinning what's happened in West Africa the last 2 years relative to the rest of the continent?
Thanks, Wayne. And just on behalf of the ownership of the 4 Points Lagos, just like to welcome everybody to VI. I'm sorry I'm not with you personally today. Good question, Wayne. I think Rami's right. I think none of us are sitting believing that the world will be the same after the pandemic. We've obviously changed our business models during the pandemic, and I think there's lessons we've learned from that hopefully will make us in some respects stronger, more dynamic, improved our decision-making processes, and probably in some markets had to be a lot more aware, as Ram said, with regard to where's your demand actually coming from. You can no longer be complacent, let's just wait for the international travelers, and that's where our business is about. We've had to be a lot more respectful about local demand. As Ram said, we've had to think a lot more about, religious festivals locally. How does that impact upon the business? As well as spending a lot more time with our suppliers and their employees, our colleagues, understanding what the impact has been for them with regard to the pandemic. So there's been a lot of reflection going on, Wayne, and I think none of us really know what the future beholds. But specifically with regard to Lagos, I think you're right. I think the market today is different from what it was pre-COVID. I think as an operator, we are far more conscious of our relationship with the business community in Lagos and wider Nigeria. We're very focused in revenue terms and how we can drive that domestic business. And some of that's legacy COVID as well. During the real heart of the pandemic, the 4 Points stayed open, and we built new relationships with new local companies. We repurposed areas. Khalik and the team in the 4 Points worked really hard to challenge themselves and say, how do we use the facilities we have in what's now a very different world? And I think you're right. Today, we are very dependent upon that local domestic business. It's good to see the meetings demand coming back. I think that's a footnote that we all need to be aware of, that meetings is starting to become accepted behavior again. And I know, talking to some of your delegates from yesterday, Wayne, people are really happy to be at the investment forum, not just to learn and to be inspired, but also to meet other people and be in the same place. So I think that, again, is an interesting output we're having from the pandemic.
Absolutely. I think it's great that we are now starting to be able to have these events and really an important underpin for hotel demand across the region. Great. And Erwin, coming to you, I mean, I think what Ewan touches on there is important around that domestic traveler underpinning a lot of what the performance has been and the demand that has existed. And I think that's something, if we go back, the last 10 years, a lot of focus was on the international traveler to gateway cities across Africa. But over the last, I'd say, 5 years, there's been a realization that the long-term growth is more in this domestic and regional traveler. What do you think are some of the products that are needed, or where do you think there's sort of opportunity from a product point of view to capture this regional and domestic traveler?
Hi, everybody. Thank you, Wayne. I think the product and concept demand is very market specific. So there is not much of a one size fits all type of, I think, concept and product. With regards to domestic travel, I mean, roughly, according to IFC, domestic travel represents like 55% of the demand in Africa. And if you look at Europe, it's roughly 83-85%. So obviously, the demand has been much more driven and more dependent on the international demand overall in Africa. That said, if you look specifically at Nigeria, which is as you know, the largest economy and represents 70% of the tourism in Africa. We know that the domestic demand is much stronger, and we've seen today Radisson has 5 properties currently open and 5 properties under development in Nigeria, and it's a strategic country for us for a long time. And thus, obviously, we pay close attention to the market demand. And so far, we've seen that the demand and the product vary drastically from one market to another. So if you take Abuja today, Abuja is obviously in high need of, I would say, upper upscale and upscale product, because there is not much quality branded product as we speak. In fact, there is one product for the last 30 years that is leading the game, and in terms of branded supply. So now, if you look at Lagos, it's a completely different example where the demand would be much more towards mid-scale and innovative product. And what I mean by innovative product is tapping into the lifestyle product or the boutique product. If you look at the market demand in Lagos, there is a high demand currently because of COVID. The demand pattern has highly changed, and we've seen in our hotels that the performance has in fact increased and been better after being worst. So if you take the example of the Radisson Blu Lagos VI, during COVID, we were badly hit by the COVID, and the occupancy dropped to 25%. And today, for the past 5 months, the occupancy is at over 80%. And this is mainly related to the fact that we've been tapping in different market segments, mainly domestic, because of the quarantine that was happening. People couldn't travel abroad, and used it both on the business corporate segment, but also on the leisure side. And thus, this was something that was completely not being used before COVID. And today, our hotel on this particular segment are being used both on the corporate and leisure side.
Yeah. No, I think that's important. A lot of people not being able to do their international travel annual trip have shifted to urban and city breaks in a lot of these key gateway cities. Ram, coming back to you, and it's quite a broad question, but what are really the sort of fundamentals and the macros that sort of make West Africa particularly attractive to you? I mean, I think from a population dividend perspective and growth, it's clearly one of the regions where we're going to see a lot of growth. And is it really this 30-year story, or are we going to see sort of a lot more diversification of these economies in the shorter term and underpinning that sort of game changer in the hotel sector?
Yeah, no, that's a good question. I think we all pride ourselves in being long-term investors, but 30 years is a very long time. And I think what we look for more is, well, what are the drivers in the next 5 to 10 years? And one thing that is clear from the numbers, even that you had on your presentation, Wayne, and from what Erwan just mentioned, if in 2019 the performance of Lagos seemed tough, what you see today is that it's recovered much faster than other markets. And you have to understand what has driven that. And you have to realize that Nigeria and Lagos in particular has always been a difficult market for international investors. But there is a reason for that. And that recovery has, and what you see in some of these numbers, early numbers, proves that that's the case. The simple metrics that we look at when we're in Lagos is, of course, you have the size of the economy. I'll come back to the population, the young population, because that can be a dividend that can also be a challenge. But you have clearly a city, an economy that has a low number of branded properties, a low number of branded quality properties, and you have challenges that you have in other places also, but are magnified in Lagos. Power, the F&B concepts that are available in hotels, and we look at what are those areas in VI. What are those places where there is still a lot of opportunities, right? You can be in almost any locations in those areas and you will find yourself doing quite well. The challenge is not necessarily finding the perfect exact location, like in a Santon where you have to be at the exact corner of two streets. Here it's figuring out the other challenges, right? Like we look at a map of Lagos, figure out how you can get a power, you figure out how you're going to get like good F&B and import high quality food consistently. You figure out, are you going to have good Wi-Fi for people, for your guests? Those are more when we look at the market from a product perspective, those are the challenges we tend to think about, because those will differentiate you. Today, the premium that you pay in staying in 4 Points or in any of the Radisson hotels and others is that you're paying because you get a really good supply of power and reliable Wi-Fi. You get a premium, right? You don't get that in even some of the mid-scale properties. From a macro, more economic perspective, the challenge is FX. That's in Nigeria. That's the number one. When we do our investment thesis or committee members, that's the number one thing. How are you addressing it? What are you doing about it? What are you thinking about managing that risk? That becomes the biggest challenge, right? Like so for us, West Africa, Lagos in particular, I think there is plenty of opportunities. The challenge is not finding the opportunity. The challenge is how do you execute on this.
No, that's a fantastic point. I mean, you cannot talk about the opportunity, particularly in Lagos, without talking about the currency situation. So Ewan, maybe to you, just your thoughts on that. But I think more broadly across the region, what do you sort of see as the economic makeup of a lot of these economies impacting the hotel performance? Still quite primary sector driven rather than secondary and tertiary sectors. How do you sort of see the maturation of a lot of these economies driving growth over the next decade or so?
I think Ram's right about the currency piece. And obviously, the devaluation of the Naira, we're seeing the same with regard to the CD, situation with regard to what happened with regard to Turkish lira today. You can see generally that there's a real concern with regard to what happens in currency terms, and if you're investing in Forex, what that then means for your returns. I think the other piece for us is you're absolutely right. I think to look at those capital cities, those major nodes, and make a decision about which nodes have a requirement, where there is a gap, if you like, an opportunity. I think, as we've talked before, Wayne, I think the balance between new build and acquisition of existing has heavily moved towards existing. We don't have to go to many real estate investment forums these days to not hear about the cost of construction and what's happening in that sector, which makes it incredibly difficult to build. So I think acquisitions is probably a more favourable approach to go through. And I think what is happening this now is that because of the pandemic, it's maybe causing investors and lenders to think again about their exposure to hospitality. And you've mentioned the negative way. You've mentioned that many banks are now a little bit less optimistic. They don't accept linear growth. But many banks have exposure today in their loan books that's causing them to review those. And Westmont, from what we've done in Europe, we've done quite a lot of rescues in the past, where we've gone in. We don't mind the complexities, if you like. We've managed to do restructuring. We've managed to work with the brands to then reinflate that business and to give it viability. Maybe that's going to be happening more going forward. We've definitely seen that trend more in East Africa to date since the sort of movement of almost the last chapter, hopefully, of the pandemic. Southern Africa, we're maybe not seeing as much conversations happening, but I don't think it's I don't think it's not going to happen. I just think those conversations are probably going to be happening soon, if not already. And then the final piece I would say is that I think and I know you're going to go to Erwan next. It's interesting to see what the brands are thinking. You know, the brands really need to grow. They want to be in these markets. Maybe they're going to be more flexible and more embracing of conversions. I pose that question. And then secondly, understanding from a brand perspective what makes their brand different, so that they can agree with owners where the capital's spent, because there's undoubtedly there is just an increasing list of capital requirements when you build hotels. And it's almost back to your previous session, you know, ESG is absolutely the top of the list these days. We can no longer ignore it, but it does come with some impact upon cost. And the brands need to kind of help us as owners to think about how we allocate our capital.
Absolutely, and Owen, that's a perfect segue to you. I mean, we know development costs have always been high, particularly in West Africa. I think I saw a statistic that said the cost to get a container from China to the harbor in Lagos is the same cost as it is to get that same container to Victoria Island. So there's a whole systemic issue with the value chain of development in West Africa. I mean, how are the brands factoring this in when development costs have always been high, but the performance was good, and the rates have come down consistently. Devaluation of currency. We know why it's difficult to make new developments work. How are the brands and yourselves kind of adjusting to this situation to still make new developments feasible?
New developments for all players is very difficult in West Africa, and Radisson is no exception to it. So obviously we've seen the rise on the costing side, which is, as mentioned earlier by Ram and everyone, the devaluation of the Naira and the increase of the prime material cost is one of the reasons. So obviously, one of the elements, as mentioned earlier, is conversion. Radisson has taken quite a strong step. We created a brand dedicated right during COVID called Radisson Individual, which is a brand dedicated to conversions. It offers independent hotels international awareness through our channels of distribution while keeping their initial identity. So it's some kind of co-branding, local and international. But the main benefit is that we look at properties with a very, very minimal investment and what we call a PIP, which is product improvement plan. Normally, when you rebrand into a core brand, the PIP is very, very major. And then most of the hotels right now are in distress, and none of the owners have the budget to invest into a brand to convert, because this is not the time where they're very cash positive because of the performance of the hotels. So with this brand, we're basing ourselves on the guest satisfaction of different social medias, such as TripAdvisor, Booking.com, and we have an external audit being done. And if the rate is over 8, 9, or 10, which means not below 8 out of 10, we consider that this product is being satisfactory to the customer, and thus we take a leap of faith in branding this hotel under our soft Radisson Individual, while there is element that require investment, which is mainly 1, fire life safety, 2, signage, and 3, obviously, IT. So it still requires investment, but overall, to give you an idea, it represents, I would say, around 10% of the normal investment. So there is a discount of 90%. Yeah. So it's quite, and this brand is obviously being very successful. We're going to open in West Africa our first Radisson Individual around February, March next year in Accra, in Ghana. and we have launched this brand less than a year ago, and we have about 20 hotels in EM&A already signed or due to open.
Okay.
So this is one of the response, since we cannot control much of those external factors into new development, and we are still helping our partners by value engineering the project and making sure that we have the right positioning. And there is a lot of answers to new development, but the fact is we see the rise of the cost being very, very strong in most of the markets. So our strategy has been to focus on the conversion via the launch of Radisson individual.
Absolutely. And of course, it's not only a West Africa challenge, it's a challenge throughout the region. Ewan, just coming to something you said around the ESG and impact, I guess, on the capital stack. And I think this is a huge opportunity that we're seeing. And I think if we put the E and the G aside and focus on the S, you know, the S has always been pretty central to the thesis for investing into Africa from a hotel's point of view. Maybe not the commercial driver for an investor, but certainly supporting that capital from a DFI perspective, creating jobs, some fantastic case studies around the impact of hotels in the region. But, you know, I think a huge opportunity to attract ESG focused capital as a result. I mean, we're seeing a rise in some green bonds. We're seeing a lot more kind of interest here. And I think, you know, Ram, I met your new ESG person down at the Green Building conference a few weeks ago. Fantastic to see, you know, and I think a lot of the involvement you've had with the IFC of late. Tell us about ESG for yourselves. You know, what is kind of what does it mean? What are you hoping to achieve as part of that?
No, absolutely, and you mentioned exactly. We ESG is so important and critical. We hired and we were looking to hire for a long time, but an excellent person to sort of spearhead that function within our hotel network. I think ESG always comes down. I mean, it makes sense first and foremost because it has to work from a returns perspective. And when you look at the metrics that, for example, an EDGE certification by IFC, what they look at, water usage, power usage, how do you get that down? And they actually help you think through those methodologies, through concepts, through processes to get those things down. And those, especially in a place like Lagos, those are massive costs. And if you can be a bit more efficient, it has a huge impact on your bottom line. So that's important on the E side, and on the S side as well. And on the governance side, I think what you find is that you continue having an institutionalization of the hotel sector and of the hospitality sector, going towards more and more institutional owners. I mean, family owners can also become more institutional, but really just like putting in place processes and services and mode of thinking that gets you there. You know, things like having and you see that differences during the pandemic when people that have governance or a bit more reactive were not necessarily the small family business owners. There were people who had already systems and process and thinking a certain way. Right. I think from our perspective, we've integrated on top of our hotel operator core that have their own ESG mandate and sort of processes. We incorporated our own on top of it as Casada, because we think there is more to do, and the scale at which we are bringing, which we're investing, will lead to a big difference in terms of what the hospitality sector will evolve. It's almost, in a way, we are paying, in some instances, the school fees, maybe perhaps for the rest of the sector to sort of learn from that and grow from that and kind of not have to pay those same school fees. But we think it's an important, critical component of it. It's not only something that our investors expect, that our stakeholders expect and the community expects. It also just makes a lot of business sense, and that's where a lot of the world is going towards.
Absolutely. Ewan, I'm going to ask you the same question a little bit differently, because I absolutely know how important this is to Westmont, to you and your partners in the region. But what are some of the challenges, I guess, to progressing on the ESG frontier on the continent? Absolutely, we understand how important it is and what the opportunity is for it. But what are some of the challenges or hurdles to actually getting there?
Thanks, Wayne. It really is difficult. When you look at major capex these days, easily we're spending a third to 50% of the capex on MEP, and that's really hard to see a return on it, because guests just expect you to have cooled air, Wi-Fi, hot water, and all the life and safety provisions that you'd expect of any of these international hotels. So they're not willing to pay a premium for it. So it really is quite a difficult thing to place in a return calculation. Secondly, you're in a position where in the market you're competing with hotels that don't have those same obligations, if you like. So you could argue it's not particularly a fair playing field. And then I suppose thirdly, back to Ram's point earlier about certification. There's so many certificates out there. You've got Edge, you've got a number of other different certifications, which a lot of them are actually premised upon new build. And it's actually not that difficult these days to get energy saving and reduced carbon impact when you're doing a new build. I would argue it's probably doesn't cost you more these days to build an environmentally conscientious hotel. But when you take an existing asset, as we talked about, and that's where the trend is, it's so much more difficult to retrofit.
Yeah, absolutely.
To get that technology into the building is expensive. And at the same time, the brands are, and absolutely, because the consumer wants it, they want the connectivity. I'll give you a note. In the last 4 years, the cost of IT for a conversion has doubled for us. And that's just because the guest expects to have that full connectivity. And I think your point's right. I think in ESG perspectives, I would expect in the near future, they're going to expect us as well to be reducing our carbon footprint, as Ram said, demonstrating what we've done with regard to savings. They're not going to pay a premium for it. They're just going to expect it. It's not easy. I suppose I'll be looking for, some cheap debt. I'll be looking for, to your point, maybe the DFIs will come back in and go, we don't want to fund lots of new builds, but actually it's the right thing to do on behalf of the World Bank and the UN to encourage these older assets to reduce their impact upon the environment. Maybe that's something we could do. Secondly, how do we drive down our supply chains? So how do we get our local, because we want to buy local, we want to utilize local suppliers. How do we empower them and give them the capacity to reduce their carbon impact? And then thirdly, how do we as an industry within Lagos look at how do we reduce our water usage? How do we reduce the amount of wastewater we put into the city system? Those are the things that I would far prefer to be talking about as an industry, rather than having lots of conversations about a licensing tax that Lagos City Council wants to put on us.
Yeah, absolutely. And I think we could probably discuss it for quite a while. I think that's been a big shift. And we've always had ESG specialists, but many of us are now having to kind of embrace these and understand it. And it's fascinating, but I think huge opportunity and great to be talking about it. But we've got a few minutes left. And I think just want to kind of get some closing thoughts from the three of you around where to from here. What are the sort of, what are you watching most closely from a recovery point of view? Is it very much, like you said, Ram, around not if, but where? Is it very much kind of the markets that are strategic to yourselves based on your own investment criteria? What are you watching from a recovery and outlook? Let's start with Erwin.
Our strategy was set up. We set up a 5-year plan, and our aim is to double our portfolio in West Africa by 2025. And main dynamic related to hotel supply has not changed. So even though the performance of the hotel has changed quite a lot, the supply dynamic and the lack of supply in this case still remains the same. So our objective. So we're still very focused on the same market in West Africa as we were prior to. So we're still focusing on Nigeria with obviously Lagos, Abuja, and Port Harcourt, and obviously looking at Ghana and Ivory Coast and Senegal, which are the four key markets for Radisson for our expansion. Now, are we going to expand in a very linear way and looking at spreading our standard brand in where our competitors are? The answer is no. We're going to be very diversified, and we see that there is a need and demand, for example, in serviced apartment much more than they used to be prior to COVID, and we see that across EMEA. And so we are much more focused on conversion, as I explained earlier, and we are looking at different markets within the capital cities of financial hub I just mentioned.
Great, good. Ram, a few minutes. What are your sort of closing thoughts?
I think for us, what we're looking very closely at is two things. On top of everything else that's been mentioned today, but something that's important to add is vaccination rates, and more importantly, perception of vaccination rates and COVID and handling of COVID. I think people will get more and more comfortable with traveling even if there is low vaccination rates. But that perception is very hard to measure, and that will create some winners and losers in sort of the in West Africa for sure, and Sub-Saharan Africa in general. I think that will have a shift a little bit in the markets. And I think the second thing we sort of look at and try and understand is just what is happening in terms of development costs. And this has been mentioned also today, but really, how do we optimize? How do we make it better? Whether it's for conversion, new build, or challenging, but for all of the above, we need to be able to be much smarter and integrate with the local supply chain.
Good, Ewan. 1 or 2 minutes to close us off. What are you looking at?
I think we're looking at the US inflation rates, to be candid. That's definitely a concern with regard to blue chip, big companies out there that we're flying in the world. Combine that with, as Ram mentioned and Erwin mentioned, with regard to just changing of business habits. Maybe people are going to be less time in the office. How does that impact our industry? I just leave that question. I think looking at leisure, it's been really interesting to see the fact that leisure came back faster than business travel has. So that's an interesting insight to see what happens there. And I think thirdly, it's looking at the key city markets and the key leisure destinations of the continent and asking the question, what is the right product for that demand? And as was mentioned earlier, I think that demand's a lot more fragmented than it was previously. So sorry, Wayne, I don't think it's got simpler. I think it's got more complicated. And we probably need a bit more work from JLL to help us guide us through the complexities.
Well, our pleasure, and it's certainly been a pleasure having you three gentlemen here today and talking about such an important topic at an important time. I think now's the time, really, the way we start getting our hands dirty and figuring out that recovery, because it's so critical. Globally, we're seeing a lot of jobs that can be created through hospitality, and Africa is certainly no exception to that. Critical to economic development, and fantastic to be here. And thank you to the API team for having us. Io, I think that's back over to you.
Thank you very much, Wayne, for moderating that panel. And I just liked how we left it, at the end, whether it's getting simpler or getting a bit more complex. I know I have a lot of work to do going into our report writing season, for the 2022 outlook. So thank you, everyone. Thank you so much for the commentary and for just sharing everything you've seen so far, right down to the kind of countries that you're looking into expanding, and of course your main consideration. So thank you all very much, and do enjoy the rest of your day.